Most people think global wealth flows through Wall Street and London. But right now, a strategic alliance controlling 40% of global trade is rewriting those rules completely. The BRICS blueprint for wealth and global power isn't some distant economic theory. It's a $39 trillion infrastructure revolution that's happening right now. And while Western nations debate recession risks, BRICS members are building mineral corridors, digital trade networks, and financial systems that bypass traditional Western control entirely. I'm about to show you the 5-pillar framework that's creating new wealth opportunities most investors don't even know exist yet. The most recent BRICS expansions has changed everything about global economic power. Countries like Egypt, Ethiopia, Iran, Saudi Arabia, the UAE, and Indonesia, they didn't just join randomly. Each new member brings specific strategic capabilities that create a coordinated economic weapon. The UAE controls OPEC commodity marketing expertise. Indonesia dominates critical mineral processing. Saudi Arabia provides massive investment capital through sovereign wealth funds. Ethiopia opens direct access to the African Continental Free Trade Area. Iran connects energy corridors from Russia to the Middle East. And this isn't coincidence. It's calculated economic warfare against Western financial dominance. With Vietnam joining as the 10th member, BRICS now controls 46% of global GDP. That's nearly half of the world's economic output under coordinated management. The Suez Canal crisis exposed a $2 trillion vulnerability in global trade. In 2024, vessel traffic collapsed from 26,400 to just 13,200 ships. And insurance costs for Red Sea routes jumped from 0.7% to 2% of vessel value. Small trading companies got crushed by these increases. But BRICS saw opportunity where others saw crisis. The International North-South Transport Corridor now connects Russia, Iran, and India through multimodal networks. Transit times now have dropped dramatically compared to the Suez Canal routes. The India, Middle East, Europe economic corridor creates direct rail and sea connections. The UAE, India, and Saudi Arabia are building this infrastructure right now. And Arctic trade routes are opening as climate change makes northern passages navigable. China, Russia, and India are all investing heavily in these shorter routes to Europe. South Africa benefits from increased Cape of Good Hope traffic as traditional routes face disruption. Every crisis in Western-controlled trade routes is strengthening BRICS alternatives. This isn't luck, it's strategic planning. India's Bharat trade net brings together customs, taxation, and logistics on one seamless digital platform. Every government department connects through a unified interface. The Master Application for International Trade and Regulatory interface streamlines trade for IMEC corridor countries. Bureaucratic delays are going to disappear through this digital automation. Ethiopia's digital platform development shows the African expansion strategy. UAE private investment is creating systems to connect Ethiopian companies across all of Africa. The Bharat Africa Set 2 project targets 260,000 points of sale across the continent. And implementation could raise India's exports to Africa from 6.5% to 12% by 2030. Virtual logistics corridors reduce trade costs within BRICS and create scalable models for partner countries. Physical infrastructure gets enhanced by digital efficiency. The Global Logistics Platform Office in Dubai is already being established. DP World leads this initiative with backing from all BRICS stakeholders. Africa holds 30% of the world's critical mineral reserves. The Democratic Republic of Congo controls half of the world's cobalt. South Africa dominates manganese supplies. But BRICS isn't just extracting these resources. They're building complete mineral corridors that include processing facilities, storage warehouses, and end-to-end connectivity. Technology transfer happens at every level of these corridors. Indonesia brings lithium processing expertise. Bolivia adds significant lithium reserves as a partner country. The UAE's OPEC expertise helps streamline commodity marketing across the entire network. Years of oil marketing coordination now applies to these critical minerals. And these mineral corridors secure supply chains for electric vehicles, renewable energy, and advanced technology. BRICS members control both the resources and the processing capabilities. The UN Secretary General's panel on critical energy transition minerals identified 7 key principles for modern mineral sectors, and BRICS priorities align perfectly with these guidelines. If you like what you're seeing, please be sure to hit that like button, share this with a friend, and drop a hi in the comments to boost our reach. You can support us even with these simple actions. Now let's continue with our story. The new development bank has deployed $26.5 billion in sovereign loans and $3.4 billion in non-sovereign loans. But that's just the foundation. BRICS right now faces a $12 trillion infrastructure funding gap through 2030. Traditional Western financial institutions can't or won't fill this gap. At the Kazan summit, Vladimir Putin proposed a global investment platform specifically for BRICS. This complements existing financial mechanisms like the contingent reserve arrangement. The BRICS interbank cooperation mechanism is creating new guarantee methods that bypass Western banking systems. And local currency exchanges reduces dollar dependency and volatility risks. Africa alone needs over $120 billion by 2030 for transport equipment supporting the African Continental Free Trade Area. Road infrastructure requires $80 billion. Rail networks need another nearly $55 billion, but BRICS members have the capital, expertise, and strategic interest to fund this development. Western institutions are being systematically excluded from these opportunities, and central banks and investment agencies across all BRICS nations are creating uniform cooperation platforms. Private sector partnerships expand rapidly through coordinated government support. BRICS members are now coordinating their responses to unilateral trade policies from Western nations. We could see that preferential trade arrangements between BRICS partners bypass traditional Western systems, and local currency settlement procedures eliminate Western financial system dependency. Common standards cooperation allows faster adaptation to global requirements. Information sharing mechanisms accelerate the standard upgrades across all member nations. And this helps BRICS producers comply with Western policies while maintaining competitive advantages. National banks increase their roles in trade finance. The new development bank subsidizes compliance costs for transitioning to these higher standards. This creates a parallel financial system that operates independently of Western control. BRICS members can now trade, invest, and develop without Western approval or interference. The strategy for BRICS economic partnership expired in 2025, and the new expanded strategy covers 5 and 10-year periods with unprecedented coordination. A virtual secretariat with national coordinators across cooperation mechanisms is being established. This provides permanent institutional support, unlike the G20's temporary structures. The Troika system ensures policy continuity. Past, present, and next chairs collaborate on sustained implementation of long-term strategies. The BRICS Business Council evolves into an investment partnership. Business expertise directly addresses critical challenges identified by the grouping. And this governance structure creates stability and predictability that attracts long-term investment. And we can see juxtaposed with Western institutions that face uncertain political challenges every few years. The African Continental Free Trade Area represents the biggest wealth creation opportunity in decades, and BRICS expansion positions the bloc to dominate this development. Economic diversification supports sustainable development goals across water security, food security, and industrialization. All these sectors need massive investment and expertise. BRICS members control the capital, the resources, and the technical knowledge needed to develop the African Continental Free Trade Area. And Western competition gets systematically excluded through these preferential partnerships. The demographic dividend of Africa's young population creates enormous consumer markets. BRICS trade partnerships position these member nations to truly capture this growth. BRICS attracted $355 billion in foreign directed investment in 2021 with just 5 members. Expanded membership will dramatically increase this new capacity. New members include nations with massive investable surpluses, mature financial corporations, and established global financial hubs. Currency risk gets mitigated through local exchange mechanisms. Sectoral alignment through dedicated platforms coordinates investment opportunities across all of these member nations. This creates synergies that multiply individual national capabilities. The virtual logistics corridors, mineral processing facilities, and digital trade platforms create multiple revenue streams for member nations and their private sector partners. This comprehensive program focuses on connectivity, critical resources, robust financing, digital innovation, and resilient governance. Each pillar reinforces the others. Logistics and infrastructure development leads current priorities. Green energy and digital technology creates future competitive advantages. And critical mineral management ensures long-term strategic security. Economic diversification spreads benefits across all member populations. The traditional Western-dominated system faces its real first alternative since World War II. This isn't competition, it's systematic replacement. The BRICS blueprint for wealth and global power operates through concrete mechanisms and measurable results. The infrastructure gets built, the trade flows increase, the financial systems expand. Every global crisis strengthens BRICS alternatives. Supply chain disruptions drive adoption of BRICS corridors. Financial sanctions accelerate local currency systems. The wealth corridors are being constructed right now. The partnerships are forming. The investments are flowing to members and partners alike. This transformation affects every investor, business owner, and individual planning their economic future. The next decade determines who positions themselves correctly. The BRICS blueprint isn't just changing trade routes. It's rewriting the rules of wealth creation entirely. Thank you, everyone, for watching.